Hey guys, get ready for the How I Raised It podcast, the show where you get an inside, unfiltered look at how real entrepreneurs raise capital for their businesses. I'm your host, Nathan Beckert, and today's episode is with Jason Ye of Adamant Ventures, which runs a fundraising training program for entrepreneurs. So we're going to get into some of the tips he shares for preparing to fundraise, getting organized, developing your pitch narrative, and so on. If you're tuning into this podcast to learn how to raise capital for your business, I've created a super valuable free welcome package for you. It includes a list of 2,500 investors who don't require a warm intro, plus 200 of the most important questions that investors are going to ask you. So this is going to really help you get ready to raise money. To get instant access, click the link in the first comment. And while you're there, please leave us a nice comment, what you like about this show or this series in general. And last but not least, if you enjoy this conversation and think someone else would too, please share it with them. Hit that subscribe button, hit the like button to get all our latest episodes. Thank you. Now sit back and enjoy the chat with Jason.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by foundersuite.com. Today I have Jason Ye of Adamant coming to us from Venice, California. How's it going down in Venice today?
This is good. We've had an unseasonably cold winter, but now I think we're getting through that and back into the warm California weather that brought me here in the first place.
Well, what is Adamant Ventures? Tell us what you do.
Yeah, it's a good question. I actually always tell the origin story because it's funny. Created the entity back in 2006, a long time ago, when I was just doing web development on the side as like a 22-year-old or something. I don't want to date myself, but and I created the name because I thought it was cool. I had no idea what venture capital was, barely knew what tech startups were at the time. And just kind of kept that name alive for 15 years until about 2 years ago, coming out of my last venture-backed startup, had a small exit, trying to figure out what to do. And long story short, started taking a bunch of calls with founders with no business in mind, just wanting to help them based on my experience as a venture capitalist, as a venture-backed founder, having raised multiple rounds of financing, and wanted to talk to them about pretty much anything they needed help with that my background could help with. But weirdly, and I think you've seen this too in what you do, saw like 90% of the questions all being about the confusing nature of fundraising and what to do. And so over the last 2 years, I've evolved from a little hobby of taking calls and helping founders with 30-minute pieces of advice to kind of scaling what I now describe as a small media company. And we're focused on creating content that supports and educates founders around their most difficult challenges. And right now we are starting with fundraising. So we do that across podcasts like this, different, but similar to what you're doing, newsletters, free tools, essays, et cetera. And it culminates with a big fellowship program that we also help a small number of founders with a few times a year.
That was my next question. What's the format or user journey, or customer journey for people? Is it they come and consume your content, or they go through a program? Maybe touch on those paths.
Yeah, I think there's a fairly tried and true approach to these type of businesses, content-based businesses. But my goal is to help as many people as possible, and we kind of realize that 98% of the people that I touch will get my support for free. So with the podcasts, a lot of people discover me through the podcast. We do a podcast called Funded, which is a narrative-driven interview format. So highly produced. Our producer comes from Politico and other great outlets. It's supposed to be inspirational. It's supposed to be lightly educational. They start hearing my voice. They start hearing my insights. We have a new weekly newsletter that I go kind of deep into thoughts I have on the approach to fundraising, things that I've seen in market with live fundraisers. The idea is you can get a lot out of those pieces of content. My free products, the sort of fundraise management tool, which is a very junior version of the Founder Suite, I'd say. Like, people likely upgrade to Founder Suite after they see my spreadsheet tool. But at the very end of the funnel, it's founders who, a lot of them have already raised capital before, have venture capitalists on their cap table, have advisors, That program is really designed for people that know that the fundraising process is a huge amount of work, huge amount of preparation, and are looking for essentially more structure, more accountability, more community around that. So that's how I would describe the user journey of discovering me through content, getting 99% of the help they need through the content. And then for 1% of them looking for additional support, they end up joining one of our programs.
So, okay, let's talk about the program. How long is it? What does it cover? What's involved? Is it equity? Is it fee-based? What's the structure?
So it's a 5-week program, and it's very, very focused on preparation. So it's one of the things that I believe is highly influential and important into a successful fundraise. A lot of people rush into what they do. I believe that there are predictable things that a founder can do to really improve the efficiency and effectiveness of a fundraise. And so it's a 5-week program. We go through everything from making sure that the founder knows exactly why they're doing their company, because that bleeds into the next thing, which is like creating their narrative. Narrative is, narrative and deck. And then figuring out all the things that they need to do to actually get the process set up right. What is the research that they need to do to create the top of funnel that is required to be successful, and then how do they organize that and execute that. So the idea is at the end of the 5-week program, you should be able to step away and hit go, like hit a button and be like, we're starting to fundraise. It's a fee-based program. So we've been pushed to sort of transition that to equity this next time around. So that actually hasn't been decided where that all lays out, but the first 4 cohorts were all sort of tuition-based programs.
Interesting. And are the most of the folks, I don't know, is there a commonality to them? Are they first-time founders? I would imagine. Are they in different sectors? Are they right out of college? Are they older folks? I mean, is it kind of
it's a really, really good question. And this was kind of my own journey around customer discovery. I had my own expectations. I sort of expected most of the founders to be deer in headlights, never even seen the process before type founders who wanted to go into these programs. And those are, we do get a couple of those that come through the program, the actual fellowship program. Most of those types of founders are actually serviced by the free content that we put out there. The down the middle founder that works with us actually is a founder, like I said, who's raised money before. And a lot of times it'll be a couple of different scenarios. They either raised money like kind of by the skin of their teeth. They got that first round of capital done and they're like, oh my God, I can't believe we got that done. There has to be a better way, or I need it more organized, or just someone that has been around enough to know that they could probably get it done on their own, but there is a lot of value in having sort of expert support, accountability, and community around the whole process. And age ranges have gone from early 20s all the way to a gentleman in the 70s who has an amazing fresh produce business that I'm excited about. International, from Pakistan to the UK to Asia, most in the United States though. So it really spans the gamut, and technology, like I said, e-commerce, et cetera. So it's been fun to be exposed to a wide range of founders.
This isn't a dig or anything, but there are thousands of accelerators out there. And not all of them are focused on fundraising, but many of them are, right? So I guess how have you carved off this little niche that's not served by this huge ocean of dollars?
not a dig at all. Like, I totally understand. Look, this is one of the things that I uncovered too, is especially when I found out that a lot of the people that wanted to come to me had already raised venture capital before. And this is where I've come down to it, is that a lot of people have the expertise that I have, that you have. They look like venture capitalists. A lot of them are advisors. A lot of them are founders that have gone through before and maybe invested on their own. They have kind of this insight that we all have. But the support, I think, that is like a bear hug of support is something that most VCs actually don't have time for. I'd been a VC for a while, and I remember exactly what this was like. We'd have founders that were getting ready to raise. We'd bring them up on our weekly meetings, and then it would be like, Jason, do a call with Nathan, or have a partner do a call with Nathan, and we'd sit down on a call like this, and we're like, all right, Nathan, do you know who you're going after? Do you have your top of funnel? Let's make sure we bundle the process and make it tight. What introductions are you looking for? And that would be like a 30-minute call. And most founders walk away from that like, you're a venture-backed founder. You've been on both sides. You kind of know what it feels like. It's like, yeah, the VC says they want to spend time with you, but they don't really have that much time with you. Yeah. And so the way I would describe it is there's a ton of support out there, and great accelerator programs that all have a fundraising module as a part of it. I would say that there just is a slice of the founder population, excellent founders who know they just want as much support around every stage, every step of the journey as possible. And those are the ones that are looking for, they have executive coaching. They bring on advisors to help them with very specific segments of whatever challenge that they're facing. And some of them are great fits for something like our fellowship program.
Cool. Let's go into, I guess, give us a few nuggets or nuggets from the program. Obviously, you don't have to give away the whole program, of course, but give us.
No. I'll try to do as much as I can. I mean, I love just kind of giving away as much as I can as quickly as possible. It's hard to do it all, but look, I think there's a couple core concepts that I really hang everything around. And a lot of it has to do with the sort of misunderstanding of what fundraising is. And there are two big misunderstandings that I think people need to be sort of fixed around. And one of them is this idea that there's this fundraising process, and it's like this song and dance, that we need to do it completely separate from the company building. And it's just like, okay, I'm building my company, and all right, time to go fundraise. I really believe, and this is what I tell founders, is like, I believe the best fundraising is sort of demonstrating that you are a great company, that you're a great bet, you're worth betting on, and then doing everything you can to have investors discover that. And so that first part is like, I really talk about fundraising prep. Like, I might be telling you, this is what you're doing for fundraising. But what we're really saying is like, you're doing it for fundraising because it's what you should do to really build a great company. And so that's a general concept that I think a lot of founders need to internalize. And like I said, so one of the first things we start with is like this really deep dive around why you're doing the company and what you're going to be excited about because of all the things that come with running a company, especially a venture-backed company. And I'll say, like, I've had founders go through the program who essentially, because of the program, decided not to do the company, or get away from it. And I would count that as one of the most successful outcomes, because what I say is like, look, if you work with someone like me, or if you work with someone like Nathan, deep experts in this field, there's a good chance we're going to get you funded. We're probably going to get you funded. And that's not necessarily the best thing if you're not ready to do it, right? Like, if you're not excited to run a venture-backed company and you take on $2 million, like, that is a level of stress that you just don't want if it's not also combined with like a true excitement around what you're doing, right? So that's the first thing that I try to disavow founders of. The second thing is really this understanding of what the investment process is like. So what I tell people is like, when you're investing, it's not like there's an algorithm, right? Like, you come to me with a specific set of data points, and it's like, funded. Yeah. Right. Because like anything you tell me, any numbers that you give to me, even all the way up to like Series C, like, we can't extrapolate that to infinity. And so once you really understand that, and you really internalize this idea that investors are not like, this is not a science. This is not a, like, I know exactly why I'm making this bet. And so if you understand that early stage fundraising and early stage investing is not about like the very specific details and yes or no, but an aggregation and a combination of a ton of signals to try to come up with the best possible decision of whether or not to invest, that's when you start understanding, what the important things around process play into actually getting to a successful raise. And so that's like the first thing that I would say. And we cover this in the course in great detail. And then some of the big nuggets that I'd say, like once you understand those things, the two things I talk about is preparation. So it has to do with this idea that like it isn't so separate from your company building. You should be thinking about how you're going to fundraise. And the raises that are the quickest on paper probably took the longest to prepare for, either explicitly in terms of like coming up with lead lists and identifying how you're going to get introductions, or just over a number of years of a career building up a track record and people hanging around the hoop wanting to know who you are. So that's one thing. So preparation is key. And then the second thing, like a term that I coined that some people know me for, is this idea of calendar density. I'm always trying to help founders organize a process that drives towards what I call calendar density. And it's this idea of, can you set up a process whose initial meetings land and get scheduled into an area on your calendar that has real density? So a number of meetings scheduled each day for 1 or 2 weeks. And the reason we do that is kind of going back to this idea that investment decisions are not science, or they're not algorithms. It's a feeling, right? And if you can create a set of circumstances where investors believe that other people are interested, that is when things start going off in their head around losing deals, getting excited about deals, FOMOing, and whether or not you could be the unicorn that returns their fund. So I'll pause right there and see if there's anything you want to pull apart or discuss, because I know you have a real background in this.
Yeah, great. I think let's pick up on that last one a little. The calendar density. What is a good benchmark that you recommend founders have in terms of two-part question, number of meetings a week, total number of investors in their pipeline, and how densely they can pack that number, if there's sort of like rules of thumb benchmark. And then I guess, well, let's start with that. And then I want to get into the FOMOing maybe as a part two, but let's start with the calendar density a little bit more. Yeah.
Sure. I should probably have more specific benchmarks against this, but the general top of funnel mark that I get people to go after and not stop at, but like they need to know the number is big, especially in today's market, is finding 100 targets, 100 targets. And, that would have been my advice a couple of years ago. It's at least that now, just because of the way investors are looking at deals, quickly looking at them on Zoom and deciding to pass very quickly or not, right? In terms of calendar density marks, I would say if you can get 3 to 4 meetings a day across 4 of the 5 days in a week, and then do it in 2 weeks. So that's, call it 30 meetings in 2 weeks. That's kind of where you need to be targeting. You're not going to go super back to back, because you're probably going to be exhausted by that. You also just want to have time and space to run your company. But I think if you can get to 20 to 30 meetings in your first 10 to 14 days, that's going to be a great target to go after.
Yeah, that's good. Do you recommend, this is something I sometimes advise, but sometimes not, let's say you built that list of 100 and you're trying to pack the first couple of weeks with 30 to 40 meetings. Do you stack those first meetings with your tier 3 list or the lower people on your list?
I'm glad that you hesitated around that, because I also have my hesitations. I believe calendar density is more important than the tiering of the tranching of bands of investor quality. I think like if you do too much tranching, because I've heard some people say like, take your C's, finish those, then go to your B's, and then go to your A's. I think you've kind of like diffused the pressure that I think has a lot of influence over the impact of a process. And so I would say that this is what I advise. I advise you lightly try to schedule some of your least exciting meetings sooner. And like if your favorite investors come in, like try to push them to like day 3 to day 4. But don't run full processes with your C's and then your B's and your A's.
I see. Yeah.
I think any sort of practice and warm up can actually get done before you execute the formal
Okay. Cool.
launch.
Let's talk about FOMOing. I like it as a verb. FOMOing.
Yeah.
I've noticed almost like great inflation that there's a FOMO. Like I get like deal flow from AngelList, right? And every single deal is like 3x oversubscribed nowadays. Like it used to be just, we're now 80% full, but now everything is 3x oversubscribed without fail, right? And it's trying to create that FOMO. I feel like that noise, it's getting noisy, right? And so I guess, how do you create the FOMO without being artificial or overhyping, or what are you seeing people do that actually works?
Yeah. I mean, look, a couple of things I'd say is part of that great inflation, part of that inflation that you're seeing is probably driven by reality because there is so much money going out. You're right, though, it is probably getting stretched. The other thing I'd say is there are a number of things that as a seasoned investor, you see happening to you and you're like, I know what's happening. I know what you're trying to do, Nathan. 3x oversubscribed. There's no way it's that. And yet it still impacts you. You can tell me it doesn't, but it does, it lightly does. So I'll just say that. Look, I believe, and I tell the founders this all the time, like I draw the line at lying. I just, in general, in life, like lying is not a good way to do business. When you're trying to build a lot of pressure and excitement around your thing, you are going to want to tell the best story that you can tell, and you're going to want to like push the envelope, but you just don't lie. I'd say it honestly, all this, when I think about any of the strategies, you kind of have to like keep going back to the first thing. And the first thing is like finding one believer, one person, because one person that moves in such a way that is supportive of your deal without being FOMO'd. And then that person or that element or that insight is the thing that you start the momentum train around. So it can be an angel investor committing. It can be an article getting published. It can be anything that shows a sort of momentum towards you. And then once you have that, then you're going to have to, hopefully you'll have done all your organization so you can line it all up and keep going. Does that make sense?
Sure. Okay.
Yeah.
What level of detail do you recommend founders share with other investors when they're trying to create FOMO, right? Like, I'll give you multiple choice answer and you can answer off the multiple choice too. Do you recommend they actually say, I'm meeting with Sequoia and Benchmark this week? Or do you say, I've got 5 meetings this week? Or do you say, I've got strong interest from a bunch of investors, right? Or something else altogether? Yeah.
Yeah. I like, as with a lot of things in fundraising, it's sort of situational. I would say out of the choices you gave me, I'd likely do that middle one of, we have 5 or so meetings scheduled this week, more coming. And the reason I wouldn't drop the specific name right away is like, you don't know how much momentum momentum that those specific meetings are actually going to represent. So you may truly have a meeting with Sequoia, but you may just have a meeting with Sequoia, and what if I know all the partners at Sequoia? I'll probably just call my friend at Sequoia, whereas, there are other trickier ways to make sure that those names get floated in a way that shows a little bit more brand within the pressure. And like, if they hear from another source that like, I've heard some top tier funds are talking to them, like those are like sort of ninja nuance level things that you can start doing. But out of those 3 things, I'd kind of put it in the middle, being able to say like, look, we already scheduled like 5 meetings this week. I think we're going to have more. Would love to squeeze you in if you can. Yeah.
Good. Do you counsel anything on, warm intro versus cold outreach? Any like just general thoughts on that? Do one, don't do the other, blend it? What? Yeah.
So I'm pretty specific about this. I think intros are the lifeblood of investing because of what I said. I think introductions are the lifeblood of successful and great fundraising because of what we said, which is like, investing is not a science. And so you're kind of looking for every credibility signal that you can. And I think an intro is one of the most important ways and effective ways to do that, right? It's essentially borrowing credibility or assigning credibility via somebody else. That said, I think cold outreach should be a part of every fundraise. And so you will do as much work as you can to line up as many warm outreaches as you can, but warm connections as you can, but there will be diminishing returns on that work. Like, how do I get to Nathan? One of my closest friends knows Nathan, easy. And you're going down this list, and then you have, call it 20 other investors you could get to. And it's like, man, it's like 3 hops to get to Jason.
Yeah.
That would be great. We just don't have the time. I'm going to craft a really great cold outreach that references my ability to get to him, and hopefully it hits. And sometimes it does hit, right? But I would, so it would be a blend and spend most of the time on warm.
Got it. Yep. Good. What else? Give us some more nuggets. I'm sure there's a lot more. This is all good stuff.
Yeah.
But maybe, yeah.
There's tons. I mean, like I'd say narrative development is like something that is, that people spend time on, but don't spend enough time on it. And I say that because there are a couple of things that I think are really important to point out is that as a founder, you're trying to craft a story that you really believe in. And, coming up with the right narrative is kind of your exercise to make sure, especially in the earliest stages when you're like developing ideas and paths forward, et cetera. It's like coming up with the right narrative that you're going to tell to the world that you believe in is kind of your exercise in making sure like, hey, like, have I done enough customer development to make sure that I'm super committed to this path forward?
Mm-hmm.
So that's one thing I think working on narrative is really important. And then the second thing is, as you're working through narrative, making sure that you get feedback on it is really important for a couple of reasons. Where you're trying to stress test your own commitment to this story. And then 2, as you get committed to the story, your ability to tell a really, really concise story that sort of hits home and people understand right away and get excited enough to lean in to ask more questions is going to be really handicapped by the fact that you are so close to your own business. Like I always talk about this. I consider myself an expert in doing this. Like when I hear someone's pitch, I can go this way, cut this way. I think this is important. When I talk about my own business, though, everything is important. Like everything I do is so exciting. And I want to tell you about the third format podcast that I'm going to be releasing this year. And I want to tell you about the additional things that are on the horizon. But that's not actually what's going to get you, Nathan, excited about me in 30 seconds. And so it's even as an expert, it's pretty impossible to do that on your own. So highly encourage people to be working on their narrative a lot and getting smart ears and eyes on it as you develop it.
I agree with you a lot. I used to do pitch decks for a living. We do it for clients as kind of a way to get them in our service wheelhouse. And I probably built 100+ pitch decks, had a whole process for teasing out the story. But then when it was time to build my own pitch deck for Founder Suite, when I was raising money, it was a mess. I struggled with it. I was like just staring at a wall and like, what do I include in this? I can't think of the narrative. So anyway, I guess what's the remedy? Is it hiring a pitch deck consultant? Is it joining a program, joining an accelerator, which, has usually a lot of mentor help around that? I don't know. How do you
Look,
overcome that?
I think there are multiple ways to skin a cat, right? If you want to brute force this and do it all on your own, find other founders who can look at your deck, find friendly investors, angels, or institutional investors to look at your deck, get feedback from them. Not everyone has access to that network though right away. And not everyone, not everyone has our network where I could reach out to 10 VCs that I wouldn't ever want to pitch them on my business for and get them to be like, hey, can you just tell me whatever? A lot of people as they're coming into this game, like that one connection to a VC is already like more than they've had before. So burning it on a quick, like, hey, will you look at this deck is not that easy. And so that's why I think a lot of accelerator programs are amazing. I'm a big fan of honestly, most of the established accelerator programs. I completely understand why they exist. And I'll say this as when I was a first-time founder who had been a VC, I had like really, really inflated sense of self around what I was able to do and what I could get done even as a first-time founder. And the fact of the matter is, with all the pedigree in the world, I was a terrible first-time founder. Like I made every mistake in the book. And the only reason I'm able to be a good advisor now is because I like know what the pitfalls that I fell into were.
Uh-huh.
So I'm a huge supporter of coaching and community and programs of all shapes and sizes, as long as you have sort of belief and trust in where those entities are coming from, then I think finding that support wherever you can is a great path forward.
What do you think? Okay, a couple of random questions. I'll speak for myself, but I think you're maybe in the same general sandbox. Like a lot of our stuff, Founder Suite is focused on kind of traditional ways of raising capital from angels and VCs. And now we're seeing, crowdfunding really grow pretty rapidly with Start Engine, WeFunder, Republic, all these guys. What do you sort of see as how do these two worlds coexist, or does one overtake the other, kind of the crowdfunding versus traditional angel VC paths? Any thoughts on that?
Yeah, lots of thoughts on that. I want to write an essay about sort of DAO funding too, because if you think about the next wave and what everyone talks about, I kind of have the same answer for everything, which is at the end of the day, whether it's a venture capitalist at Sequoia with a multi-stage firm or running a Republic campaign or a WeFunder campaign, you're trying to convince people to invest in something that has no data, very little data behind it on why they should invest, right? And so, and the same with, if you think about DAO investment theses around like, hey, like let's put the decision making in to the hands of the people, like around the table, so it's not like trapped in 5 partners at a big ivory tower making decisions. Everyone's doing the same thing though. At the end of the day, every entity who's going to be putting money in has to figure out how they sort through signals that say whether or not this company is a good bet or not. Yeah. And what I would say is venture capital exists because it has created processes and methodologies in finding signal where other people might not have access to that. So some of it is not that difficult on the surface, which is like access to networks that can tell you whether or not people were great or not. And at the end of the day, someone is going to have to make that final decision on whether or not to write a check. So it's a long way of saying, what do I think about these different funding sources? I think they're going to exist for sure. I think they're going to grow, but they will occupy very specific places in the sort of capital stack. And I think there's always going to be a market for sort of expert signal watchers, if I had to describe anything, people that come from a little bit more formal background of investing, who it's their job to be maintaining networks and maintaining understanding of the different opportunities out there, and then putting money to work. And then I think there will be people that follow those sort of main funding sources in venture capital firms.
Yeah,
we'll see if that ages well, Nathan. But that's my stance right now.
Cool. Well, I'll let you get off the hook here. Any last tips for founders raising capital? Just what have we not covered? Any last little bits of advice you can share?
Honestly, look, this is going to sound like a plug for you or a plug for me, but when I talk about organization of fundraisers, I truly mean it. Everything you can do to put structure and organization around how you develop your process is going to pay off, multiples off of the effort that you put in. The biggest mistakes I see and made have been just when founders wing it, and when founders kind of feel like they can just spend a little bit of time here and there and be successful because they've seen a friend who raised in a couple of weeks. Yeah. So I'm just going to underline that. It's find tools, find structure, find organization that allows you to be more successful when you fundraise. And the little money that you invest buying software or being part of a program will pay off like crazy when you get to the end of the rainbow.
Yep. Good. Cool. All right. If people want to learn more, it's Adamant Ventures. Looks like I can't read it without saying Adamant, even though I wasn't a big fan of Adam, but Adamant Ventures, basically Adamant Ventures. And then you also have the funded pod. We didn't really talk about this, but a funded pod is give it a 30-second or 10-second, overview of that.
It's a very narrative driven interview style podcast where we double click on the path that founders took to raising capital, and we try to really tease out the twists and turns and the challenges that they ran into, and not just the headlines you see on media where it's like, is $20 million. It's like, no, like failed for 3 months, had to restart the fundraise, and then kind of came back out with an updated process, updated narrative. So that's our narrative driven one. And then we'll be releasing the back channel very soon, which is a mini podcast where sort of back channel ideas around what fundraising strategies look like and why they exist.
Cool. Yeah, that's awesome. And I want to come on your show at some point here. I think that's in my court to look at the calendar, but anyway, it looks cool. Check it out. Yeah. Fundedpod.com and adamantventures.com. Awesome, Jason. This is great. Cool. When's the next program start? If anyone's interested in joining that.
Yeah. We're about to open up applications, and the next cohort will be starting in the beginning of Q2. So it'd be a great time to sort of prepare for.
And it's virtual. It's all virtual, right? Or
it's all virtual. We have had some ideas of bringing some people together that are similar geographies, but yeah, we're all Zoom based.
Awesome. Are a lot in Southern California? They're all over the world, all over the place.
All over the world. The last cohort had 3 out of 25 were in Southern California. So
interesting. Cool. All right. Well, I'll let you get back to work here. Good luck with the next cohort, and we'll catch you later. Thank you.
Yeah, we'll catch you on my podcast soon. Thanks for having me.
Perfect. Bye. Thanks.